Good morning, traders and investors. Today is Tuesday. It's January 10th, 2023. Where is this year going? Today is actually my parents' 53 years wedding anniversary. Can you believe that? 53rd wedding anniversary. Congratulations, Mom and Dad. Let's make another 53 years. Anyhow, let's get into today's session. It's about 7:58. The market's going to open up in about an hour and 32 minutes to be exact with you. And as you can see here, the Dow Jones, which is the first thing we look at in the morning, we look at the Dow Jones. It's down about 160 points. And if you look at the Dow Jones yesterday, just want to show you the intraday trading action. It's kind of interesting. So the day before yesterday, last week, we rallied. And then yesterday we opened up higher and we basically sunk. And as you can see here, let me just show you the intraday data yesterday. So this is yesterday. This is yesterday, so you could see what happened right here. This is yesterday. We rallied for 4 bars, and then we erased all of it. And now we're looking like we're going to go lower. So it looks like we're going to be erasing the majority of the gains that we saw since Friday, those massive 700 points. Yesterday we erased a bunch of it. We're now down about 150 points. Things are not looking all that pretty. And when you look at the Dow Jones the way I'm looking at it right now, you see the choppiness, you see how this is a reversal bar, and now we're back in. And if you look at it on a monthly basis, remember what I said yesterday? The algos are going to cause us to shortly, potentially go slightly above the 200-day moving average, but nothing good's going to happen, and we're going to come back down here. This is algo right here. These are just algos trying to snap out the weak hands, shake out, making investors think the bulls are here before taking them out right here and ending right there. And we're already at 133-ish. We're already down here. So we're already in this. We're going to open, unless something drastically happens in the next hour and a half, we're going to open back within this range. Now, if you look at the QQQ, you will see something interesting. The QQQ never went above that range. It went to the upper end of, remember yesterday I showed you these levels, and the day before I showed you these levels, and I said we're going to go up to the end of this range, because remember, the QQQ is not as strong as the Dow right now, and then it'll erase everything. And look at where we're at. We went right to the upper end of the range, and now we're almost back in the middle of it. And if you look again, if you look at the daily chart, you'll see we had a reversal bar right there, right at the top. I could erase it a little bit here. But again, anything taking us above, the market makers and the algos did an amazing job of trying to trick investors into believing that this market's going bullish, and it's not. Another major factor I want to show you, the number of stocks making 20-day highs. It's at 213 as of the close yesterday. Look at it the day before yesterday, 299. See, it peaked out going into Monday, and then on Friday it was 76. So things are shifting back, and today, let me just give you some levels on the S&P. Notice that range again. Let me just show you that range so you could see what I'm talking about right here. The upper band, and here's the lower end of the range. And again, I noticed right around the 200-day moving average, went right above it and then came right back down. But again, and if you look at the tighter bar, it would be right here. So see how we shook out a little bit and then came right back down? You've got to be really, really careful. Another factor is volatility. This is the VIX. Notice the lows are getting higher and it's reverting higher. And also, we got a lot of Fed data this week. We got Jerome Powell speaking today. You got CPI on Thursday, consumer sentiment. So I'm not expecting this to be an amazing session. Now, interestingly enough, yesterday morning, where I was really wrong was the bond market. I thought the bond was going to revert lower, but it actually went higher, and now it's lower. Well, if the bond market comes just a little bit higher and we get the RSI right here into the blue level, I'm going to sell it, but not till then. I'd rather be extra cautious and a little more fearful, but give you guys better trades and higher probability. So I'd rather just delay this and wait till we're overbought, because it doesn't look like we are. And we may have some flight to quality in light of the CPI report coming later in the week. Let's talk a little bit about pre-market, and then I'll get into the nitty-gritty. But I wanted to show you the intraday trading action. And remember what I said, there's a high chance we'll break the line, go a little higher, squeeze out the shorts, and then come back down. That's exactly what the market did right here. It's literally exactly what the market did. And now we're at 386. which puts us right here. So we're well into this range right now. Let's talk about global economy, pre-market open, and what to expect, what to watch out for. Market participants turning cautious ahead of crucial inflation data. That's the CPI on Thursday, and Fed speaking multiple times this week. The Nasdaq Composite ended in the green, mainly due to gains in technology, basic materials, and utilities. But after the opening, everything just kept going down. In Monday's trading session, mega growth stock like Apple, Google, and Microsoft led the gains in tech. 10-year Treasury yield fell to the lowest level in 3 weeks. Don't hold your breath. I think it's going to increase right now. Also, NVIDIA gained about 5% following a series of positive remarks from Wall Street. That's what kept the stock market positive. The Dow was not positive yesterday. Weakness in consumer, defensive, and healthcare sectors weighed in on the broader market. Oh boy, San Francisco Fed President Daly said on Monday, it's really too soon to declare victory on inflation. I would agree with that, with Mary, very much so on that. Bostic said on Monday that fresh inflation data would keep Fed policy decide the pace of interest rate hikes at their upcoming meetings, meaning they don't have no idea. At the same time, the 0.50 odds are increasing once again, and the 0.50 are decreasing. It'll be interesting to see what happens as we get closer to Thursday. In Europe, stocks retreated from an 8-month high as hawkish comments from the Fed officials weighed in on risk sentiment ahead of Mr. Jerome, I'm not going to be honest with you till you reappoint me, Powell speaks. China closed lower as recent fueled optimism over a Chinese reopening faded, just like the rally in the U.S. Investors grew cautious over the near-term economic recovery in China amid the worst case COVID outbreak in the country. Me too. That's what I'm thinking. Like, what are they thinking out there? Why are things getting better? Why are they reopening? And even if they're reopening, America is wise to their shenanigans and to their squirrely games, and they're not letting people in without a COVID test. So Chinese stocks traded on a multi-month highs demonstrated a stellar recovery in December as investors priced in reopening in the world's second largest economy. Meanwhile, manufacturing is still down 40%. How they're going to overcome that, I have no idea. In terms of stocks to watch, there's no major stocks to watch today. But in terms of earnings news, you've got earnings on Albertsons. That's important because that's a supermarket. That will give us a good understanding of how things are moving with Kroger and other supermarkets and consumer staples. So keep your eye on ACI. And then you've got Bed Bath & Beyond. That stock is just a dog with fleas. But it is a very highly traded stock. So keep your eye on BBBY and Albertsons. Now, as I mentioned earlier, you got Mr. Jerome speaking, Powell speaking today. You've got energy. You've got CPI on Thursday, which is huge. In terms of the overall market, one sector that's starting to move up again, which I am liking, is the energy sector. The energy sector is now was at the 50-day line. But I'm liking the energy sector, and I think it's going to start leading into a breakout because this, to me, looks like a consolidation that's leading higher. And also, we are still in a recessionary mode. In terms of the 11 major sectors, let me go through them with you. Energy. Energy is now, again, the leading sector. Industrial, financial, basic materials, utilities, and consumer staples. Notice utilities is moving higher, and notice healthcare is moving lower. That's something we're going to have to pay attention to because I was, for the last quarter, really bullish on healthcare in 2022. But it looks like healthcare is now waning away. But I wouldn't hold my breath because consumer staples and utilities all went down for the count. And look at where they're at. Utilities is finally coming back. Real estate is now ahead of technology, communication services, and consumer discretionary, as I thought there would. And these three are lagging. So believe it or not, we're actually seeing some semblance of assimilation here. I mean, now I haven't really looked for an assimilation in the sectors, but they're actually fairly in line with each other. Energy, industrial, financial, materials, utilities, consumer staples. I like what I'm seeing here. And technology, communication services, and consumer discretionary are kind of on the question mark down. Not question mark down. The question mark is with healthcare and real estate right now. And real estate may actually be coming up. Looking at the market internals, which we often look at, you will see right now we're kind of mid-ground, really mid-ground. But look at where the vulnerability is. Information technology, 42%. Communication services, 36%. They're not looking all that great. Energy looks oversold in the short term, but in the long term, it actually looks pretty good. In the broad scheme of things, NASDAQ, 50%. I mean, 50%, it's just not looking all that great. And when we look at momentum levels, long-term momentum levels, which we're going to do right now, you will see that it looks like it's coming up, but every time it comes up here, it tends to go down. So I would be very, very cautious about this upswing, and I would expect it to cool off. In terms of the 200-day line, let me look at the NASDAQ and the 200-day and see how it's looking. Yeah, it looks like it's coming up, but it looks like it can fade out very, very soon. So be very, very cautious on this. Very, very, very cautious on this. Speaking of being cautious, let me tell you guys what the strongest stocks are right now and the weakest stocks, so you guys can have a game plan going into today's session. So, Oxy, still the leading stock. Lamb Weston, Healthcare, Marathon, Schlumberger, Exxon, Cardinal Health. So don't let the sectors throw you off. In terms of what I'm seeing right now, healthcare and energy is still the strongest sector, and a little bit of industrial sprung in. Weakest stuff, you've got Tesla, Dish, it's time to sell Dish again. Expedia, remember I've been telling you Expedia is not going to do anybody any favors this year. Amazon, consumer discretionary. Caesars Entertainment, I've been telling you to sell this stock. Seagate, I think we're short this stock actually, now that I think about it. So there's a lot of defensive. Live Nation, Norwegian, going out stocks. You don't want to be in the going out, in the consumer discretionary, the concert, the events, the spending on things you don't need, like Dish Network, like Tesla, luxuries, Seagate, Amazon, Caesars. Go with things people really, really need right now, not the things that they really, really want. So that's the bottom line there. Now, I want to give you guys some good advice. If you look at the market right now, notice we're in this level. I want to give you guys some levels right now. On the NASDAQ 100, I'm serious about these levels. Let's just use the 200-day moving average because it's right there. And I predicted the other day it would be right there. You got 275 to the upside, 260 on the downside. On the SPY, you've got, we'll just use the 200 again, 390, maybe 392 versus 375. And on the Dow Jones, I'm going to stick to these levels, just like I did yesterday, because we're back in it. And I'll use the 200-day. 33,500, which would put us like around here, all the way down to 32,400. Notice we're right now back in that range. We're at 33,300. I'm taking a zero off, so you get the DIA, which is the ETF number. And I'm giving you the Dow. So if you want the full Dow number, that number is at 33,500 and 32,500, 2,000-point range or 3,000-point range. Ignore this. This was just shakeout by algos yesterday. And that's kind of what we're seeing. This is why, folks, I'm not using stop losses that much these days. Because when you use stop losses, the algos shake you out, and then they bring you right back into range. So be very, very careful. Remember, markets are coming off of overbought levels. To me, it looks like what we've been seeing in the last few days in the SPY and the QQQ is just a big fat shakeout. I mean, look at the 6 month. Look at that. Up, reversal, and then back into this range right here. And I wouldn't be surprised if we started going towards the bottom, towards the 374 level. So stay very, very defensive for the foreseeable future. Now, folks, Bank of America, Citigroup, other banks are going to report earnings. Guess when? This week. That's right, this week. Earnings season is one of my favorite times to trade, and T-Buzz's too. That's because these quarterly reports, they have the power to move stocks regardless of what the broader market's doing. Remember, I always say when stocks are in earnings, when earnings report, they kind of do their own thing a few days before earnings and a few days after earnings. They lose their correlation to their market, which is one of the reasons why I don't get in before earnings. I always wait after earnings, but there's a story behind all this. Now, again, earnings is one of the best and favorite times for traders to get into the market. And regardless of what the broad market's doing, you could always find an edge in earnings if you know what to do. Now, even better, there's a very, very cool 3-day window where stocks have the potential to move the most. That's right around earnings. And I am 1,000% believer in this, okay? Now, Tom Busby and I believe that we've zeroed in on how to tap in on this unique phenomena. And we call it the earnings drift. And we're going to explain everything about it to you. We're holding a special presentation today at 1 p.m. Eastern Time, Tuesday, January 10th, my parents' anniversary. I'm wearing a red shirt. I'm ready to go. 1 p.m. Eastern Time. Today, we're going to share all the details on this new strategy. You're going to want to see it before these big bank reports hit. Banks start off the earnings season with a kick. We're in the New Year's. Trust me on this. There's only one way professional traders deal with earnings. We're both going to uncover it for the first time. Otherwise, it's too risky playing with earnings unless you know how to do it. And T-Buzz and I, we've decoded a very, very special formula that will show you exactly how it's done step by step. We'll take all the guesswork out. It's a true educational session where you need to bring a piece of paper and a pen. And you walk away with some crucial details of how to take advantage of the current earnings season that's starting with bank stocks this week. And I'll give a full update on earnings at my noon VIP room today. I'm going to have an open house. I'm inviting everybody. So find the link in the Telegram channel and just come on in at noon, and then we'll walk you through everything, and we'll go to the 1 p.m. session. You don't want to miss out. Follow the link. If you don't know where the link is, or if you can't find it, it's in the YouTube Wealth Press channel or below this video. Comments, feedbacks. This is going to be red hot. When T-Buzz wanted to do this, I got really excited because I said this is the only way to trade earnings. You've got to get in on it, and you've got to do it now. Follow the link below, post comments, feedback, and I'll talk to you guys soon. Have a great official first start of the week for the stock market. Bye, guys.